Assalamualaikum and hi everyone. My name is Nomada Rahma binti Muhammad Amri. Now I will begin with the introduction. I will begin with the history of Citibank Berhad in Malaysia. Citibank Berhad started operation in Malaysia in 1959 with its first branch in Kuala Lumpur, making it one of the earliest foreign banks after independence. In its early years, the bank focused on serving multinational cooperation by supporting international trade, of foreign exchange and corporate financing. In 1994, Citibank was locally incorporated as Citibank Berhad became the first American bank to do so. This marked a major milestone and showed its long-term commitment to Malaysia. In 2001, the bank consolidated its operation at Menara Citibank in Kuala Lumpur and expanded across major cities. During 2000 and 2010s, Citibank became well known for credit cards, corporate banking, treasury services, digital banking, and Sharia compliance products. In 2022, the bank exited retail consumer banking and transferred this operation to UOB Malaysia, while continuing to focus on institutional and corporate financing. Next, I will explain the organizational structure of Citibank Berhad. Citibank Berhad operates as a group that includes the bank and two subsidiaries, all consolidated in its financial statement. The bank follows Basel II regulations set by Bank Negara Malaysia to ensure strong capital and risk management. Basel II is based on three pillars. Pillar 1 focuses on minimum capital requirements. Pillar 2 involves regulatory supervision, and Pillar 3 requires disclosure of risk and capital information. Citibank Berhad calculates its capital ratio using Bank Negara Malaysia guidelines and manages credit, market and operational risk using a standardized approach to ensure financial stability. This slide shows Citibank Berhad financial performance in 2023 and 2024. In 2024, profit after tax increased to RM829.8 million, showing continued profitability although growth was lower than in 2023. Profit before tax also increased. While revenue declined, net interest income improved, indicating better interest margin management. Total assets and customer deposit increased, showing balance sheet growth and strong liquidity. Return on equity improved to 18.2% and capital adequacy remains well above regulatory requirements. Dividend payment also stay high, reflecting financial strength. Finally, on market positioning. In 2024, Citibank Berhad positioned itself as a strong global bank, operating in over 90 countries and serving clients in more than 180 jurisdictions. This global network supports Malaysian companies in expanding internationally. After a strategic refresh in 2024, the bank focused more on client and delivering its full range of services. Its key clients include multinational corporations, local corporates, public service entity and financial institutions. Citibank offers corporate and commercial bank, treasury and trade solution, market and security services and transaction service supported by Citi Solution Center. By focusing on technology,
The first one is banking and financial advisory. Citibank Malaysia has focuses on big clients like multinational company, MNC, large local businesses and government-linked organizations. They have moved away from everyday personal banking to focuses entirely on this large group. Their main advantage is huge network that covers 160 countries, helping Malaysian companies grow outside the country. So the bank provided several core financial services like loans and capital by helping companies borrow money and raise funds through stock market. The second one is M&A advisory. They giving advice when company wants to buy or merge with other businesses. And the last one is managing risk by helping businesses protect their money from changes in interest rate, oil price, or current value. Dealing with changes 2023 to 2024, the last 2 years were challenging because the economy grew by 3.7% and Bank Negara Malaysia raised interest rate by 25 basis points. Higher rates made borrowing more expenses. To handle this, Citibank changed how they work. By going digital, they replaced slow manual paperwork with fast automated system. They also focuses inward by closing consumer branch. They put all their tools and experts to work for corporate client. And the last one is faster decision. Their new digital tools help them giving advice and make decision much quicker than before.
Secondly, Treasure and Trade Solution (TTS) is a core business segment for Citibank Berhad with a strong focus on transaction banking and cross-border services. The bank mainly serves multinational corporations and large corporate clients that operate across multiple countries and currencies, and also making efficient cash and trade management essential. As highlighted in the 2023 and 2024 annual reports, key TTS offerings include cash management, payment, liquidity management, and trade finance solutions. Through digital platforms such as Citi Direct, clients are able to monitor cash position and execute payment in real time, which it improves efficiency and transparency in their daily operation. Overall, TTS generates stable fee-based income and support Citibank's low-risk, capital-efficient business model in Malaysia. Next, market and security services are an important business segment for Citibank Berhad, as highlighted in the 2023 and 2024 annual reports, with a strong focus on risk management and market access for institutional clients. Through its, for, through its foreign exchange and interest rate solution, Citibank help businesses involved in cross-border trade and international investment manage exposure to exchange rate and market fluctuation, thereby stabilizing cash flow. In addition, Citibank provides security services that mainly to institutional investors by acting as a custodian bank responsible to safekeeping securities, maintaining records, and ensuring efficient clearing and settlement. The bank's continued investment in automation and digital solutions that enhance operational efficiency, reduce errors, and strengthen regulatory compliance. Overall, these services generate stable fee-based income and support Citibank's strategy of focusing on low-risk, capital-efficient activities and long-term client relationships.
Last one is Islamic banking. Citibank Islamic banking offer the same type of services as their regular banking, but follow Sharia principle. The main difference is that they do not use fixed rates. Instead, they use profit sharing or fee-based system. This ensures that the banking system is done according to religious rules for clients who require it. To make sure everything stay compliant, the bank has strict setup. The first one is Sharia Committee, a special group of experts who check and approve every product. The second one is staff training. All the employees go through special program to understand how to manage Islamic financial asset correctly. And the last one is regular audit. The bank management frequently review reports to make sure they are following the latest Islamic financial regulation. Digital tools for Islamic finance. Citibank has moved its Islamic services onto its digital platform like Citi Direct. This has made the processes much easier for businesses. They offer 24/7 access. Clients can check their Islamic account and manage payment at any time. The second one is global connection. Malaysian company can use these tools to connect their Sharia compliant businesses to the rest of the world. And the last one is offer better efficiency. Using digital signatures and real-time data help the bank processes payment and track trade much faster, which reduce risk for businesses.
Let's move to the next part, which is its performance evaluation of Citibank Berhad. First and foremost, let's look at profitability. This shows how well the bank is earning profit using its equity and assets. For return on asset in 2023, the return on asset was 5.35%, but in 2024 it went down to 4.53%. This drop showed that the bank was less efficient in using its asset to generate profit in 2024. Citibank made less money for every ringgit of asset it owns. So overall, profitability from asset weakened in 2024. Then for the return on equity in 2023, return on equity was 36.43%, and in 2024 it's declined to 34.55%. This means shareholders receive lower return in 2024. So from the investor point of view, Citibank performed weaker in 2024 because it earns less profit from shareholder fund. For the for the net interest margin, here we see an improvement in 2023. The margin was only 0.025, but in 2024 it's increased to 0.479. This means Citibank earned better interest income in 2024 after subtracting interest expenses. So, for lending and borrowing activity, the bank performed better in 2024. Next, for the liquidity, tell us whether the bank can manage short-term cash need. The first ratio is loan to total asset. In 2023, it was 15.55%, and in 2024, it's increased to 15.63%. This means Citibank used a higher percentage of its asset for loan in 2024. Higher loan can increase income, but they also raise credit risk. Then we look at liquid asset to total asset. In 2023, liquid asset were 28.20%, and in 2024 they rose to 39.07%. This is a positive sign because it showed the bank held more cash and near cash asset in 2024. So the bank was stronger in liquidity and better prepared to meet short-term obligation.
I will explain the company performance evolution based on asset quality, capital adequacy, and management soundness. First, let's look at the asset quality that show how well Citibanks manage their loans and also deposit. Number 1, non-performing loans. This ratio shows the level of the bad loan. The NPL ratio is decreases from 0.49% to 0.05% in 2024. This improvement means that the Citibank has fewer problems loans in 2024, indicating better credit management and lower risk. Number 2, loan to deposit ratio that show how much of the deposit are used for lending. The increase in 2024 shows that the Citibank is using more deposit to generate loans, but the ratio is still low. This suggests the company is liquid and cautious with no aggressive lending risk. Number 3, deposit to shareholder funds. This ratio shows how much Citibank relies on customer deposit compared to its own capital. In 2023, the ratio is 5.51 times and it increases to 6.27 times in 2024. This means customer deposits are growing faster than shareholder funds. While this reflects on public confidence, the Citibank should ensure capital remains sufficient to support their We will look at the capital adequacy, which measures Citibank's ability to absorb losses and remain stable. Number 1, capital to risk-weighted asset ratio. This ratio is calculated by dividing Tier 1 and Tier 2 capital by risk-weighted asset. The increase in 2024 shows the company has a very strong capital position. Number 2, core capital ratio. Although there is a small decrease, the ratio remains strong. This indicates the Citibank continues to maintain a solid core capital base. Lastly, management soundness. It reflects how efficiently bank's management control their expenses. The ratio is decreases from 99.41% to 57.89% in 2024. This reduction shows that management is in a healthy and stable financial position.
During 2023 and 2024, Citibank Berhad successfully completed its strategic shift toward a focused institutional and corporate banking model after exiting retail customer banking. The bank strengthened its core businesses in corporate banking, treasury and trade solution, and market and security services. This clearer strategy improved cost efficiency and digital operation. Asset quality improved significantly with very low non-performing loans, while capital adequacy and liquidity remain strong. Although overall profitability ratios such as return on asset and return on equity declined slightly in 2024. Net interest margin improved, reflecting stronger core earning. Overall, Citibank Berhad remains a stable, well-capitalized institution well positioned to support high-value corporate clients in Malaysia. That's all from us. Thank you.